Thanks, Amy. Let me get the share screen underway. And good morning all. Wish I was there in Noosa, hopefully next year. Calidus. So Calidus is developing the Warrawoona Gold Project up in the Pilbara of Western Australia. And when I say developing, we truly are. These are some pictures of what is going on the ground as we speak at the moment. Very busy year. This year we've completed a bankable study, which given the board the confidence to press a button on this early work. So we are currently installing a 240-man or 240-person village. We're putting in our communications, our water bores are complete. We're just finishing pump testing. We've put in site access road. And basically, we're putting in all the infrastructure this year so we can crack into the main development next year, and 12 months thereafter, we'll be pouring gold. SAG mill, our longest lead item, has been ordered as part of the contract with GR Engineering, and that is probably another one of our key elements that we've ticked off this year. Should say keep an eye out on any social media for pictures. We tend to update a couple of times a week to show you what's going on at site. There is a lot happening. I do find it pretty exciting and interesting, and I hope you do too. Bit of a time warp back to just over a year ago when we were at Noosa. Seems like a lot longer than that since we've been allowed out of Western Australia. But this is a slide of what we said we'd do in the coming year. Certainly something we're very proud of, that we have ticked all the boxes. Everything we've said we would do, we have done. We will announce project financing this quarter, and we have commenced construction this quarter. So we have either achieved everything on time or ahead of time, and it's something we fully intend to keep doing as we move through the project development. A snapshot on the company, $136 million enterprise value. Please keep that number in mind when we start talking about the project economics. It's a very important number. 26 million cash in the bank at the end of the last quarter, so very well funded to do all of the activities that we're undertaking up on site and exploration, etc. Calidus Resources, who you heard from earlier this morning, is our largest shareholder at 12.7%. They came onto our register through placements and buying on market, and have certainly been a wonderful supportive shareholder to date, and we certainly expect that in the future. Obviously operate the Tomingley gold operation and drilling out at Boda, so a wealth of skills on any queries we ever have. Board and management own 7%, so a lot of skin in the game. We only make money if all our shareholders make money. When we talk board and management, Mark Connolly is fairly well known in the industry, but in particular I'd like to focus on Paul and Don, Paul Brennan and Don Russell. Don's just joined us. He will be GM of Warrawoona. We worked together near on 30 years ago, Don and I first up, so very experienced GM, certainly one of the best going around in Australia at the moment, and certainly very fortunate to get someone of Don's calibre and experience, and certainly makes me sleep easier at night. And Paul Brennan most recently was GM for Saracen Minerals at Carossie Dam for 4 years. So again, a wealth of operating experience. So between the three of us, certainly we've built mines, we've operated mines, and I think that's a fundamental point in what we've achieved to date and what we will continue to achieve. Looking at the share price over the last year, it's been a nice, solid, slow, incremental increase. And certainly, I suppose, we're not trying to claim to be a 10-bagger for people looking for that. I certainly see this myself as an investment which is got a really good base value and has good upside, 2-3-fold upside by bringing this into production through exploration, etc. So lower risk means potentially not the 10-bagger, but certainly a lot better than the 1% you get in the banks, or less at the moment. And certainly we see a long way for this share price to go forward. So where are we? The Pilbara, obviously a pretty exciting place to be at the moment. De Grey, obviously everyone has heard of what they're up to at Hemi, very exciting discovery up there. But this is a bit of a forgotten area of Western Australia for gold. You've got ourselves, Nova is rebooting the Nullagine project, Capricorn's building just south of Newman, Kalamazoo started drilling at Ashburton, Kairos is doing a lot of work now at Mount York, and obviously De Grey at Hemi. So lots of gold activity going on in what is predominantly an iron ore mining area, but that iron ore mining has produced or brought in a lot of infrastructure. We're 2 hours drive out from Port Hedland on a sealed road to Marble Bar. We'll be upgrading the airport at Marble Bar with the Shire. The Shire will put in $5 million. We'll put in $2 million. We'll be able to land 100-seater jets there. We bought our camp off one of the iron ore miners down at Newman, and we'll be getting our LNG from the Northwest Shelf, which is out here at Dampier and Karratha. So we'll be trucking in that LNG. That gives us low power costs, gives us low operating costs, helps us make more money for shareholders. So all of this is built around our resources, and our predominant resources at the Klondike Deposit. This deposit is almost 5 kilometres long, but we're focused in for mining on the central 2.5 kilometres. When you build a mine, the actual building of the mine is, I wouldn't say it's easy, but it's straightforward. Where people come unstuck is generally in tonnes or grade through the mill. So we are very blessed with the tonnes. We've got this very long deposit that outcrops at surface that doesn't need pre-stripping. So we can move anywhere on a deposit to secure those tonnes. Grade is obviously one of the risks you need to address. And we've done that by doing very tight space drilling. So every 12.5 metres, so 12.5 by 12.5, we've drilled out the first year of the mine plan. So that gives us a really in-depth knowledge of the deposit. With that outcropping and our mapping of that outcropping deposit with that intense drilling, we certainly feel very confident in the grade. And you'll see that our measured grade is actually higher than our indicated. So the more we've drilled it, the higher the grade has become. So again, some potential upside there as we do more drilling. The remainder of the resource is on a 25 by 25 metre drill out and is all indicated within the pit. So again, minimising that risk. If we look in cross section at that pit, here's our 12.5 by 12.5 metre drilling. You can see that higher grade as we've drilled it out more. That grade just doesn't stop before we hit it again in the next hole. As we drill it out, that will join up around our central zone of the ore body. So we do expect that grade to outperform as we head into areas outside the measured. You can see there's a large amount of mineralisation here, so we don't need to move much waste to get to that ore. So our strip ratio, which is 3.6 to 1, means we've got to move 3.6 cubic metres of waste to get 1 cubic metre of ore at a 0.3 or 4.8 strip ratio at a half gram cutoff. So very low from an industry point of view, and then by playing with our cutoff grade, leaving these sort of blue blocks to a later stage to treat, we can treat higher grade ore, which means we're feeding 1.2 gram material through the mill in the first 5 years. Talking of the mill, this is a stock standard West Australian gold plant. It's a crush, mill, out pops your gravity gold, where you can pour gold bars from, and then the rest goes into the CIL tanks, where we recover the gold after it's been put in there. The main costs associated with gold mines, a lot of it is breaking that rock down so you can access the gold. And we're very blessed to have a relatively soft rock, so we don't need to put much power in, and a rock we don't need to grind too fine to release that gold. So we've got this coarse grind. You put those two together, it means we don't need as much power as many to extract the gold. Add that together with our low power costs from that LNG, we have a very low cost of production of $16 a tonne through that processing plant. That obviously means more cash flow again for shareholders, especially combined with that 95% recovery that we're seeing of this gold. So the gold literally leaps out. GR Engineering, listed on the ASX, very well known, have built quite a few of the last gold plants in Western Australia, our preferred tenderer. As I said, they've ordered the SAG mill, they're into front-end engineering, and they will be on the ground next quarter starting to construct the actual main processing facilities. So what does this lovely new piece of equipment cost to build? The actual plant is around $80 million. And then we've got about another $27 million of surrounding infrastructure. So that's the access road, the village, the airport, the tails dam. It's to do with explosives magazines, etc. So the rest of that, adds up to 27. So 105 million to actually put in the plant and infrastructure, and 15 million to build a stockpile of ore before we turn that mill on. Not only is the pre-production mining building a stockpile of ore, it's also taking off some waste, building that tails dam, building that ROM pad. That's why it costs about $15 million, but ensures we've got 300,000 or 400,000 tonnes of ore sitting on the pad before we turn on that mill. Cash flow is all about the difference between what you receive for a commodity and what it costs you to extract. And basically, the gold price is double what it costs us to extract. It's costing us $12.90 an ounce. Gold price somewhere between $2,550, $2,600 at the moment. So a very large margin from there. We don't have any large pre-strip, as I said. The ore is outcropping, so we're into cash flow from day one. And this red line that you see on this graph, bottom right, that's our all-in sustaining cost. And you'll see it's pretty flat. There's a little bump in year 4 and 5. That's when we're kicking off the underground and we're harvesting the underground, year 6, 7. But otherwise, what this is telling you is we are generating substantial cash from day dot. Our ounce production profile is shown here. And again, we see it increasing. This is a factor of that higher grade underground ore coming in. And certainly we would not expect that to drop off a cliff. We are drilling 250 metres below the current resource at the moment to prove that this ore body continues at depth, and it will be around a lot longer than the 8 years currently shown on the feasibility study. So we'd expect that ounce production to continue into the future. What does all that mean? EBITDA, 110 million per annum. Remember, I said, what's our EV? It's 135 million at the start. So we're trading at almost a 1-to-1 EV to EBITDA. Most single asset mines are around 3-to-1, multi-asset 5-to-1. And that's where we see that value increase coming in our share price. Payback, basically a year at current gold price. So fantastic economics. That doesn't include some of the COVID incentives that we're seeing come in with capital write-downs. We've just modelled that up, probably another 10 million in cash flow in the first 2 years. And all of that just helps you maximise debt, minimise any future equity, maximise returns for shareholders. Looking where we're heading, we've got EPA sign-off. We're into now operating permits. We will get debt term sheets out this quarter. We have started early works construction. We will be on the ground with main project construction next quarter, the beginning of next year, and 12 months after that, we will be pouring first gold. As I said, we've met all of our targets we've always said during our 3-year journey to date, and we certainly expect to continue to meet them over the year ahead. So that's where our fundamental value comes from, is building this mine, getting it into production, getting that cash flow. But we certainly haven't forgotten about exploration. We need to add mine life. We want to grow production. So we do have a threefold approach to our exploration: near mine, Warrawoona, and Otways and Blue Spec. So if we just briefly look at those, 1 minute to go, it'll be a very brief look. We've basically been looking at Klondike. There's a lot of multiple trends we've got to drill. We're just getting out on the ground. We've just flown our detailed magnetics, our detailed radiometrics. It's highlighted 95 targets, 22 high priority. We're getting on the ground to address those now. We've just announced some drill results at Otways out to the east of us. Huge area to explore, known porphyries at Reedy's. Some initial holes hit copper, not as much gold as we'd like, but watch this space. We'll see how to add value. And finally, Blue Spec, a satellite deposit, 220,000 ounces at 16 grams. We're looking to acquire, build that into our model, show how that expands production and expands cash flow in future years. One graph to sum it all up. This is where there's so much value to be had in our share price. EV production per production ounce, or EV per free cash flow. The next 12 to 15 months, that will come up to the average or beyond, and that's where we see great value for shareholders coming. That will wind it up. I've got the second bell. Thank you very much. Experienced team, base gold mine getting developed, lots of exploration.
Thanks so much, Dave.
Look forward to catching up with you next year.
Thanks, Dave.